Dear students, welcome to Swayam Shiksha. Now, today's theme is budget. Now, this is a huge area, in fact. So, what we will try to address is some areas in the present budget. Second is we'll see what kind of questions can come up in the exam. That's very, very important because one is conceptual questions. Are there any trend-based questions in budget? And from the recent budget, are there any important areas? FRBM related areas we'll do it the next time, but these are the areas which I will focus in the present video. Okay, first let's see few questions here. For example, let's see there are terminology based questions in UPSC. So here we can see which of the following statements appropriately describes what is fiscal stimulus. This question was asked. So this word fiscal stimulus was asked, in fact. So this is very important. That is terminology. Then second comes up like in India, deficit financing is used for raising resources. And what is the main purpose for which deficit financing is used? Deficit financing is a mechanism of bridging deficit. Okay, so you can bridge the deficit through internal means as well as external means. So what is the main purpose? In India, generally deficit financing is majorly used for economic development. It's a very common question. Then we have this question related to non-planned expenditure. Of course, from 2017 onwards, we do not have this bifurcation of planned and non-planned. Today, we only have the budget being bifurcated into revenue account and capital account. So this bifurcation of non-capital, non-planned and planned is done away by the government. Okay, so then we have this question called as, there has been a persistent deficit budget year after year. Which of the following actions can be taken by the government to reduce deficit? There's something like to be very specific to reduce the deficit. What should the government do? That is what is this question. This question is very simple question in the format like to reduce the deficit. What exactly has to be done by the government? Okay. Then with reference to the union government, consider the following statements. So who is basically responsible for preparation of budget, etc. So these kind of simple questions. And contingency fund, consolidated public account of India. So it's a combination of polity plus economy, very important area and an easy area to score marks. Then which of them is included in the capital budget? That is, we're talking about revenue and capital, the revenue receipts, revenue expenditure, capital receipts, and capital expenditure. And then we have deficit budget year after year, which actions have to be taken by the government to handle it. And then macroeconomic framework statement, which the FRBM talks about. Of course, in detail, I'll talk about FRBM after some time. That is the next theme, not now. Okay, so let's try to observe some areas in the present budget which are important for us. In the sense, like in this budget, first of all, when I use the word budget, basically, so when I'm talking about something like a budget, so budget is a forward document. So suppose I'm talking about the budgetary estimate of 2023-24, budget is always a forward document. When I say a forward document, it is for the future. So when I'm talking about the budgetary estimate of 23-24, that is a futuristic view. So you will have few details with us. So before framing the budget for this, the budget making process would have started way in October, November. Okay, October, November itself, the budget making process would have started. Okay, so when I say 23-24, it is basically we are coming up with a budget for April, from April 1st to March 31st, 2024. April 1st, 2023. So budget making process which have started in October, November 2022. So we will have few details in front. What are the details which we will have for framing the budget? One is last year's budgetary estimate will be there. So budgetary estimate of the previous year, that is 2022-23 estimate would have been there. And by October, November, already 7 months are over of the previous year. So there would be a data change. So we'll have a revised estimate of 2022-23 based on the change in the data. We'll have the revised estimate of 22-23, and along with that we'll have the complete data. We call it as actuals, the complete data or actuals we will have of the 2021-22 because this year is only completely over. Okay, so therefore we'll have the complete data of actuals of 2021-22. We'll have the budgetary estimate of the 22-23. And since 22-23 is also not over, March 31st is still not over, and therefore you'll have the revised estimate of 22-23. Now, this is the basic understanding. Now, budget basically will deal with two important aspects. It deals with the incoming money which is moving into the government's pocket, and budget also deals with the outgoing money which is moving out of the government's pocket. And when I say incoming, we are using the word receipts, and outgoing money we use the word called expenditure or payments. It's a very common indicator. And then the next important aspect is, today you do not have planned non-planned segregation, and we do not have the segregation of developmental and non-developmental expenditures, etc. Today we are having something like the revenue account and the capital account. So when he is using the word capital budget in the questions, so it is basically related to the capital part. Capital part means it deals with the capital receipts, that is the incoming money, as well as the capital expenditure. Similarly, here revenue account should deal with revenue receipts as well as the revenue expenditure. So this is what we have to understand. So now moving forward here, what we should try to understand here is, when I talk about the revenue part, or I'll talk about the receipts part here, the receipts part, and then we are putting in the expenditure part. Okay, so here many a times are questions on the segregation, questions on with respect to segregation. What I mean by questions on segregation, so receipts, we have one is the revenue receipts and we have the capital receipts. Okay, and in the expenditure also we have the revenue expenditure and then we have the capital expenditure. This is the basic bifurcation. Now, one thing what we should understand here is, when I use the word revenue receipts or capital receipts, so revenue receipts are basically recurring receipts, and there is nothing like any liability on the head of the government because of these receipts. Such kind of receipts are called as revenue receipts. But capital receipts are those receipts which either reduce the assets of the government or increase the liabilities of the government. These are the capital receipts. Similarly, capital expenditure is that which either increase the assets of the government or reduce the liabilities of the government. This understanding should be there. Now, what we have to understand is this capital expenditure, which is going to increase the assets of the government. Now, government, if you observe our budget now, 10,000 crore is what you see in the capital expenditure part. This clearly indicates, in spite of there being COVID, government is very much focused on capital expenditure, because infrastructure development is the most critical aspect for the economic growth, and government has decided to directly focus on infrastructure development. So this budget clearly shows, yes, there will be a direct focus of the government on capital expenditure. Okay, along with that, what we should understand is, when we talk about the capital receipts, here when I say capital receipts, so for example, receipts is incoming money. So whether it is loans taken by the government or whether it is the loans recovered, that is incoming money, or whether it is disinvestment done by the government, all this is basically part of the capital receipts. For example, loans taken means government is taking loan, means government has to pay back, so liability is increasing for the government. Disinvestment means government is selling off its assets, so assets are reducing for the government. Loans recovered means government has already given a loan, and this loan was an asset for the government, something that is an asset. Why? Because on that government was receiving some interest on a regular basis. Now, once that loan is recovered, something that was an asset earlier is no more an asset. So, therefore, loan recovered means asset is coming down. So, capital receipts basically will either reduce the asset or increase the liability. But when I say capital expenditure will increase the asset or reduce the liability. So, for example, capital expenditure is asking questions like, for example, when we talk about bond related debt or equity. Okay, so now all these entities, for example, instead of giving loans taken, suppose he's giving bonds being issued or debt financing, all that is basically a capital part, you can observe. Similarly, here in the capital expenditure, One is infrastructure, spending on infrastructure, assets are going to increase. Or loans repaid, when you're repaying the loan repaid, you're repaying the loan. So loan is repaid. Okay, that means the liabilities are coming down. Okay, so these are what part of capital expenditure. Okay, so revenue receipts, you have both tax related revenue receipts and non-tax. That means all tax will be part of revenue receipts, whether it is direct tax or indirect tax. All futile expenditures which are not leading to creation of assets, like including defense, unless and until you're buying uh, some missile or something. Otherwise, the regular defense expenditure will be part of revenue expenditure. Now, the highest among all the revenue expenditures is the interest payments. The most dangerous of all is the interest payments. Okay. Now, once we have understood this, okay. So, when I say a deficit budget means our expenditure is going to be more than revenue. Surplus budget, the receipts are going to be more than the expenditure. Balance budget, receipts will be equal to the expenditure. Generally, yeah, we will have deficit budgets because India is a developing nation and most of the money has to be spent on welfare. Now, going to the stats in the budget, this is very important now. Okay, so if we try to observe few things here, okay, so here if we see uh, the revenue deficit is targeted at 2.9%. 23-24 fiscal deficit 5.9. Okay, so if we see the graphs here, okay, so it will be very easy. In fact, when we try to observe the key features of the budget, okay, so few things are important for prelims. So one such area is, you can see here the budgetary estimate 23-24. Okay, we find the fiscal deficit at 5.9, revenue deficit at 2.9, and revenue expend and primary deficit at 2.3. So primary deficit is nothing but FD minus interest payments. So this is one observation we can see, and observe the graph here, continuous increase, continuous decrease. That logic is not there. Okay, because COVID. So easily we can understand that you can't have a uniform increase or a decrease. Okay, so another important aspect is capital expenditure of 10 lakh crores. This is what I was talking about, capital expenditure of 10 lakh crores. This is 4 times what the capital expenditure was in 2016. This is one more important observation which we will get. Another important aspect what we should observe, or in fact we can remember here, is maximum revenue government is getting from which tax. Obviously most of us should be knowing it. It is basically GST. So earlier maximum revenue was coming from corporate taxes. Now maximum revenue in the form of tax is coming from the GST. Now if we observe here, borrowings and other liabilities holds a major chunk, and after that we find GST is the major area, and after GST we have corporate tax and then income tax followed by the excise. Okay, so this is something which is very important. And rupee goes to, out of all the revenue expenditures, major chunk is going into interest payments. Now this is one important area, 20%. You can see this will distort intergenerational equity. Everybody will think, oh, COVID is over, but the impact of COVID is still not over. Why the impact of COVID is still not over is you borrowed and fiscal deficit went to 9.2. We have seen the graph. So that means borrowings have increased. So that means in the next few generations also, the government has to pay the interest payment. So government's hands will be tied in terms of infrastructure development, etc. But still government has put up a target of 10 lakh crores in the recent budget. So this is something which is a clear observation. And then we can see here, Ministry of Defense around 5.94 lakh crores, road transport 2.7, okay, and railways 2.41 lakh crores. So these are some areas which are important. And then there are some areas where there is a lot of jump which we can see. For example, here Pradhan Mantri Awas Yojana, you can see budgetary estimate 22-23, 48,000. Then 23-24, it is 79,590. So this area becomes important for exam, because you can see there's so much of allocation done by the government in this particular area. So students asking like what schemes we have to read. Check for the allocations. Check for where the allocations have increased, it means there is some importance given by government. So there's every probability that the question can come up from that particular area. Okay, so then this is a graph which shows about the revenue receipts and capital receipts here, and the revenue expenditures and capital expenditure. One more important observation. Okay, so the tax related aspects we'll do on separate video. So here I'm not going to discuss about the new slabs and all. New slabs is, this is related to the income tax slabs. Okay, one important understanding is up to 7 lakhs, the rebate has been given by the government, tax rebate up to 7 lakhs. Now, and also one more important aspect is above 15 lakhs, now you have the 30% bracket. But more than that, the maximum surcharge earlier was 37%. So that maximum surcharge has been reduced now. Okay, so this is very important area. So maximum surcharge has been reduced, but of course, we will do a separate video on this about the maximum surcharge being reduced to 25% from 37%. Okay, and then few more important things to be remembered with respect to the budget. So this is basically tax revenues. If we see, it is 10.4%. Now, continuous increase in tax revenue was not there. Why? Because tax to GDP ratios during COVID have seen a bottom, 9.7, 9.8. So that we have to keep in mind. And then comes up the GST here. Okay, so GST. Okay, so that becomes important, like from where we are getting maximum amount of revenue. And when we talk about capital receipts, in this capital receipts, one area is disinvestment. So the present government has fixed a target of 51,000 crores when it comes to disinvestment. So these are few basic facts which we have to remember for the exam. Okay, and then when it comes to allocation, percentage change when it is something like from last year to this year. So there are where we are spending maximum, etc. So there are some areas where government decided to spend more. In fact, for example, one is railways. Okay, so that is something which is important for the exam. Okay, so and the targets which we have discussed: FD 5.9, RD 2.9, and primary deficit around 2.3%. Now moving forward, when we use the word deficit, okay, so deficit, there are different types of deficits. So one is the revenue deficit, and this revenue deficit is seen as the most dangerous form of deficit. It is nothing but the revenue expenditure minus revenue receipts. Okay, and this target for this budget is 2.9%. Now, this revenue deficit is seen as the most dangerous because one thing is it is not leading to creation of assets, but it will also exhaust the existing assets also. So that is the reason it is seen as the most dangerous form of deficit. Today, the concept of budgetary deficit is not used. So when I say budgetary deficit, it is the total expenditure minus total receipts. So total expenditure includes both revenue expenditure is there, capital expenditure. Total receipts will include revenue receipts as well as capital receipts. Now, in the capital receipts again, we have those receipts which are leading to debt, that is debt creating. When I say debt creating, we are referring to something like the borrowings. Another one is non-debt creating capital receipts. So when I say non-debt creating capital receipts, we are referring to the disinvestment as well as the loans recovered. These are the non-debt creating. Now, government is going to borrow to bridge the deficit, and therefore this BD as a concept or it has lost its relevance. So now we are only interested in the concept of FD. So fiscal deficit, which is the target is 5.9%. So when I use the word fiscal deficit, it is nothing but the total expenditure is there. I don't have any problem here. But in the total receipts, I will not take the debt creating capital receipts. I'll ignore this debt creating, that is the borrowing. So out of the total receipts, we are removing the debt creating capital receipts. We are removing this. So this debt creating capital receipt is nothing but the borrowings. Okay, so this can be written as TE minus TR, okay, plus debt creating capital receipts or borrowing. Okay, so TE minus TR is nothing but BD, budgetary deficit, BD plus borrowing. So if FD is nothing but BD plus borrowing, and if this BD is made zero, then FD will nothing but FD is nothing but the borrowing. This will be reduced to 5.9% of GDP. Okay, so now the primary deficit, this target is 2.3%, this is nothing but FD minus the interest payments. FD minus the interest payment. So in this video, we can't dig deeper, but we will just see what kind of questions have been asked in the recent past and how do we tackle these questions effectively. Okay, now see here. So there was this question, fiscal stimulus, government pumping money into the economy to recover, to revive the economy which is not doing well. This is fiscal stimulus. Either it can be by reducing tax rates, or it can be by increasing subsidy, or it can be by government coming up with bailout packages, bailing out companies, etc. So it is an intensive affirmative action of the government, basically to boost economic activity. So that is the answer for this question. So very simple question where the word is asked. Okay, so let's move forward. Now, the next question here. In India, deficit financing, bridging deficits. India deficit financing is basically used for raising resources mainly for economic development. So it's a developing nation, so maximum we use it for that purpose. With reference to budget, non-planned expenditure. Of course, here this non-planned expenditure is something like the revenue expenditure, which is seen as the futile expenditure. Earlier, this bifurcation was there. That is, planned expenditure is some expenditure which is planned during the 5-year plan. So here the defense expenditure, salaries, subsidies and all interest payments, all these four are basically non-planned. Now all these four fall under something like the revenue expenditure, okay, which is the futile expenditure. Now there has been a persistent deficit budget year after year. Deficit budget. Expenditure is more. Which of the following actions can be taken by the government to reduce deficit? So here your action should either reduce the expenditure, or increase the revenue. This is what we have to be done. So here, reducing revenue expenditure, introducing new welfare scheme should not be there because this will further increase the deficit. Rationalizing subsidy, yes. Okay, reducing subsidy or rationalizing subsidy. And therefore, reducing revenue expenditure will reduce the deficit. Rationalizing subsidies will also reduce the expenditure. Okay, so it's a very simple question trying to understand that. So with reference to the union budget, union government, who is preparing the union budget? It is a Department of Economic Affairs. It's not Department of Revenue. So sometimes there are polity-based questions like this. No amount can be withdrawn from the Consolidated Fund of India without the authorization from the Parliament. Okay. And then all disbursements made from the public account need authorization. No, from the public account, any disbursements to be made, you don't need any authorization. So contingency, you're spending, and then it is laid before the Parliament. And money has to be, if money has to be withdrawn from the Consolidated Fund of India, you require the authorization of Parliament. So here, you find only two only is the right answer. So which of the following are included in the capital budget? So when I say capital budget, the as far as our understanding goes now, okay, so expenditure on acquisition of assets like roads, infrastructure development, okay, loan is part of capital, and even loans and advances granted to state, whether it is capital receipt or either it is capital expenditure. So borrowings as well as infrastructure related areas are all part of capital. So these are very important areas which have to be read. Which one falls under which area? Okay, so I hope this video is going to help you out with respect to understanding concepts. And don't waste much time on mugging up economic survey. And once the concepts are clear, most of the UPSC economics questions can be answered. So look for important areas. I'll also come up with one important video on economic survey for prelims. So do not waste much time. Rather, you can use it for strengthening your polity area or reading the concepts better. revising current affairs, etc. Okay, so budget, see which areas are important, where there can be a question, rather than reading the whole budget, and don't burden yourself. Okay, so I hope I've made some sense and we are adding continuous value to your preparation. Please do comment in the comment section and share our videos. Please do subscribe to our YouTube channel. And one more important thing is, while preparing currently, because we have very limited time. So identify the most important areas which can definitely fetch you better marks. For example, economics is one, and similarly we have the polity area, and then environment area, modern history area, where definitely if I spend time, I can mark the right answer. So intelligence is very important at this juncture. So I wish you all the best. Signing off. Thank you.